Hey folks, welcome back to another episode of Full Disclosure. Today we're going to dive deep into an industry that's really caught my eye recently, and let me tell you, it's a gold mine of opportunities. And I'm going to share with you some specific companies that you may want to take a look at. I'm also going to share a key strategy that you can implement on top of simply buying stocks and holding them that will generate instant income on every single trade you make. But before we jump in, don't forget to ring that bell below and hit subscribe. I would love to hear your comments or feedback. And also, love to know where you're finding opportunities in this economy. And also, my cash flow wealth building system has become super popular. It's a straightforward strategy where I show you a simple yet highly effective process to identify winning stocks or high probability stocks easily with screening tools I share with you. I then show you how to use really simple indicators to tell you when to get in and when to get out of that stock. Because even though you find a great stock, you want to buy it at the right price, and these tools will help you do that very successfully. And then I'm going to show you how to turn those stocks into instant income on every single trade. It's very easy, folks, and it's definitely worth a look. And no, it's not day trading by any means. I certainly don't have time for that, and I'm sure you don't either. Oh, in fact, on Instagram, I just posted a video of my latest trades I did on Monday, where in less than 28 minutes, I made $9,600. And I was sitting outside at my health club after my workout. And you can check out an overview on my system that I teach at go.johnmacgregor.net. That's go.johnmacgregor.net. I think you'll find it really, really interesting. And by the way, let me just add, more people this year, I just saw this, will turn 65 more than ever before. In fact, on average, get this, 11,200 people, Americans, will reach that retirement age every single day this year. The question is, are you or have you prepared for that time in your life for retirement? And I know firsthand, most people have not. And I have no idea how they're going to create that income and they need in order to live the retirement life they deserve and, frankly, they desire. And this strategy I teach can be a very, very powerful solution. All right, so with that, let's dive in. So today I want to delve into a really thriving sector poised for exponential expansion, and that's the energy domain, specifically oil and gas companies. And you may have heard even Warren Buffett is substantially increasing his investment in U.S. oil and gas. After making significant investments in Chevron, Buffett is reallocating vast sums to fortify basically his stakes in American energy. And with billions of dollars being funneled into U.S. oil and gas production is at an all-time high and demand is only going up, which we'll talk about. Buffett and other energy magnates are maneuvering really to capitalize on international energy turbulence. In 2023, Buffett's Berkshire Hathaway doubled and even tripled down on the oil and gas sector. And I'll share with you why in a moment, making major investments in Chevron and Occidental Petroleum, also known as Oxy. And I made a substantial profit by owning and trading options on Oxy a while back. Folks, tumultuous times can cause anxiety for many, but astute investors like yourselves understand that chaos also presents opportunities for profits if you know where to look. And in today's world, with inflation soaring and uncertainty pervasive, one of the best strategies to balance potential rewards with inherent risk is to focus on companies with essential resources in stable regions. That's why I love this sector right now. And during periods of inflation, hard commodities such as gold, silver, and copper, which has surged by more than 30% year to date and by a massive 55% over the last 2 years, they tend to outperform other asset classes. And we've talked about those other asset classes on this show over the last couple of weeks. I also see oil, aluminum, and gas performing well during these times, and inflation shows no sign of abating, sadly. Having said that, like I said, and what this episode is all about, is finding opportunities in high inflation areas, and this is where you want to be. Everyone, well, you should be familiar with OPEC and its control over global oil supplies. However, there is a new cartel in the making called BRICS. We've talked about this, which could exert even more influence on global markets. And I don't want to dwell on BRICS specifically, but it's important to understand how powerful these 5 countries, BRICS, which is an acronym for Brazil, Russia, India, China, and South Africa, and the 30 or so other nations that have joined or indicated that they want to join BRICS, what the impact can be on prices of hard assets, particularly oil and gas. Now, look, OPEC controls the global oil market, but BRICS has the potential to manipulate the world market for various vital resources. Brazil is the world's leading producer of tin, iron, ore, and phosphate. Russia has vast reserves of oil and natural gas, as well as iron ore, manganese, chromium, nickel, platinum, titanium, copper, amongst other things. And their Siberian forests contain an estimated one-fifth of the world's timber. India boasts the world's fourth largest coal deposits, as well as significant reserves of iron ore, manganese, and lithium. And by the way, these are all great areas to be looking at, especially right now. China possesses natural resources estimated to be worth a staggering $23 trillion, including enormous coal deposits, and they're the world's largest reserves of rare earth metals. And then finally, South Africa holds the world's largest reserves of gold, lithium, platinum, and chrome. Now, I don't perceive BRICS as much of a threat as others might, but collectively, they have the power to move markets in big ways. And if you thought OPEC's stranglehold on oil was problematic, imagine what could happen if Saudi Arabia, the UAE, and Iran, the world's three biggest oil producers, what would happen if they team up with Russia to use oil as a financial weapon? This is very likely, folks. But here's the thing, with chaos comes opportunity, right? And many believe this BRICS alliance could drive the price per barrel significantly higher, which I think it will, which is why I think there's huge opportunities in oil and gas companies, which we'll get to. And this BRICS narrative is just one of many reasons why I think there's a lot of money to be made in the oil and gas sector. Even Elon Musk, who runs the largest electric vehicle company globally, has emphasized the importance of oil and gas. That's right, Elon Musk. At a conference in Norway recently, Musk advocated for increased exploration and drilling for oil and natural gas. He even cautioned that humanity could face huge problems if the transition to lower carbon energy sources is rushed. Elon Musk is even saying this. Now, conventional wisdom holds that gold is the best asset to own during inflationary periods. You probably heard this. However, a study by Wells Fargo found that oil is actually the top inflation fighter, posting a 41% average gain. And then a study using data from 1973 to 2022 by the Hartford Funds confirmed that energy stocks are the place to be during periods of inflation. And while it's possible to profit by investing in well-known large oil companies, you might want to consider the smaller oil and gas stocks, one being Prairie Operating Company, and the symbol is PROP, prop. And these smaller companies have the potential for even more impressive returns than the larger ones. Over the last 3 years, an investment in ExxonMobil would have grown by 124%. I mean, that's an incredible return in 3 years. And you could have even doubled your money. However, you could have done far better with a smaller company like Permian Resources, symbol PR, which returned 525% over the same 3 years, enough to turn $2,000 into $10,000. Shell Oil, you've heard about, it's another large company that performed decently over the last 3 years with a return of 64.5%. However, it's nowhere near as impressive as the 1,817% gain from an up-and-coming small-cap oil company called Athabasca Oil. The symbol is ATHOF. And investors there could have turned $5,000 into $91,000. Now, look, I'm not recommending any of these stocks, as it's imperative that you do your own due diligence and seek professional advice before risking any real money. I'm just merely illustrating the potential of investing in these types of companies, especially right now. And I know many people are focused, we hear this all the time, on this massive push towards green energy, which is totally ridiculous in my opinion. And the left wants to spend close to $100 trillion transitioning everything to solar and wind power. And to me, the so-called Green New Deal is a colossal scam. It's a taxpayer-funded giveaway to those really who just bankroll politicians' campaigns. And despite the rosy predictions from politicians, none of these companies make economic sense. None of them. For example, electric bus company Proterra, which received millions of dollars of our taxpayer money, recently filed for bankruptcy. And the list of these stories goes on and on. This is the same company President Biden claimed would own the future. And it joins a long list of green companies that went bust after receiving millions of dollars of our taxpayer money. Remember Solyndra, the would-be manufacturer of cylindrical solar panels touted by then President Obama? They got $535 million from us, plus $25 from California before laying off all of his employees and filing for bankruptcy. Then you've got Abound Solar, another solar cell startup, hard to say, received $400 million from the Department of Energy, in other words, us, $18 million from the U.S. Export-Import Bank, $12 million from Indiana, and another $1 million from Colorado before going, guess what? Bust. They also stuck us, the taxpayer, with a $3.7 million bill to clean up the 4,100 gallons of toxic waste it left behind. You have Fisker Automotive, an electric car manufacturer that suffered multiple recalls and eventually shut down. And that cost us, the taxpayers, $193. And then to add insult to injury on that, its technology ended up in the hands of a Chinese company. I mean, there are so many examples of this, and I'll mention this last one, A123 Systems. They shut down after the batteries they manufactured were shown to be defective. I mean, how much do we have to shell out for these green boondoggles? That one was $132 million. And these are just a small handful of green energy companies that wasted hundreds of millions of our tax dollars. Traditional energy companies, on the other hand, have a long-standing track record of making money for investors, particularly during these times of inflation. And I've talked about electric vehicles many times and how they simply don't make sense, especially long-haul trucks. None of it makes sense. I'm totally for hybrids. That makes sense. Electric vehicles, leave me alone. First, you have range anxiety. If you're low on gas, you can usually find a place to fill up the tank, right? But with EVs, charging stations are nowhere near as common, particularly in rural areas. And if you do find a charger, it'll take you half an hour to charge the battery for a few hundred miles of driving. It's even worse for trucks. And the irony of this whole thing is that even though EVs are powered by batteries, I mean, the electricity to charge those batteries is generated by coal, oil, and gas. This makes no sense. Also, our power grid simply cannot support a transition to electric vehicles. Folks, if we all went electric and plugged in to recharge, the electric grid would collapse. Furthermore, the process to manufacture EV components is an environmental nightmare. It's a disaster. They cause more harm to the environment than they do good. Lithium production alone is so toxic that even the most ardent EV advocates don't want anywhere near them. And then finally, EV battery performance drops significantly in cold weather. Not to mention how expensive it is to repair an EV, replace the battery, buy insurance, and the weight of these EV vehicles requires tires to be replaced at a much faster rate. Many parking garages can't even handle the weight of these electric vehicles. Look, gasoline-powered vehicles aren't going to be replaced by EVs anytime soon, regardless of what the politicians and pundits say. And speaking of energy demand, the demand for fossil fuels is only going to increase despite the Green New Deal and the push for electric vehicles. A lot of this demand is coming from mining cryptocurrency and artificial intelligence, which requires substantial amounts of energy. And the growth trend is rapid. Listen to this. In 2022, roughly 2,700 data centers in the US accounted for over 4% of the nation's electricity use. And by 2026, that share of electricity use is expected to reach 6%. That's a big jump. That's on top of an energy grid that's already stretched thin. By 2026, the AI industry alone is expected to consume at least 10 times its energy demand from just 3 years prior. And that's according to an IEA report. So let me just wrap up by discussing why I think oil prices are heading higher and why I believe you can make a lot of money by investing in oil and natural gas companies. There are really 4 catalysts in addition to what I've already mentioned. The first is restocking of the Strategic Petroleum Reserve, or SPR. And over the last 3 years, the Biden administration released approximately 300 million barrels from the SPR, increasing supply and reducing prices just in time for the midterm elections. So pure political play, basically reducing our national security in order for the midterm elections. That's exactly what Biden did. But now restocking the SPR will increase demand, driving prices higher. The second catalyst is geopolitical concerns. We have the war in Ukraine, increased U.S. Naval presence off the coast of Taiwan, a coup in Africa. We've got the Middle East blowing up. Countless other skirmishes around the world are escalating the demand for oil right now. And the law of supply and demand dictates that increased demand inevitably leads to higher prices, greater profits, and rising stock prices. The third catalyst is when resistance turns to support. When a previous resistance level morphs into support, Wall Street technical analysts tell clients to buy. And even if you're not a believer in technical analysis, which I am a believer, investors who will ramp up their buying, and increased demand results in higher prices. And the fourth catalyst is OPEC cutting supply. As discussed, the OPEC cartel has a significant impact on global markets. And when OPEC reduces output, as it has recently, prices only go one way, and that's up. And in early 2023, OPEC announced significant cuts to output and signaled that it intends to limit supply for the foreseeable future. And that will, again, only raise prices. And high oil prices mean higher profits for oil companies, which in turn means higher share prices for investors. And another reason I favor oil stocks is that record profits mean record dividends for investors. The world's leading oil companies, including Exxon, Shell, BP, and Chevron, are expected to surpass 2022 shareholder distributions of dividends, which has already reached an impressive $104 billion. That means not only are you positioning yourself for rising stock prices, but you're also generating and receiving cash flow while you wait. As for investing, there are a few ways to invest in this sector. And for many of you, you can invest directly in these oil and natural gas drilling projects. And there's a tremendous tax benefit for doing so. In fact, the government is basically paying you to participate in these programs. It's a tax incentive. But the challenge for many is that you must be an accredited investor to do this, which means that you need to have made $250,000 for the previous 2 years or have $1 million in net worth, excluding the equity in your home. And those numbers may be may have been revised just a little bit, but they're pretty close. And by the way, if you are interested in a direct oil program, you got to check out Mike Maselli. He's another Rich Dad advisor who has a great podcast. In fact, I was just a guest on it not too long ago. He knows his stuff and would be happy to help you out if you reach out to him. The other way to invest is in the underlying stocks that we just talked about. Find oil and gas and other energy companies that trade publicly. But make sure, folks, you do your homework and know what you're getting into. Don't just invest in something because someone told you to. You really need to do your homework. Having said that, Forbes magazine recently published an article highlighting the 10 best energy stocks for May of 2024. And here they are. They include ExxonMobil, Chevron, PetroChina, Total Energies, ConocoPhillips, BP, Canadian Natural Resources, Equinor, and Enbridge. And many of these companies pay a very nice dividend. Chevron pays a 4% dividend, PetroChina at 6.5%, Shell at 3.8%, Total Energies pays 4.5%, and Enbridge, as I mentioned, pays a dividend right now at 7.7%. Now, again, these are not recommendations that I'm making. These are just ideas and suggestions for you to take a look at. And by the way, if you don't want to pick your own individual stocks, another way to invest in this sector or in the industry is to buy an exchange traded fund or an ETF, or you could do a mutual fund. And both of these are basically a basket of energy stocks all in one. So you put $100 into this ETF or mutual fund, that $100 is going to be divided amongst all those different oil and natural gas companies all at once. And ETFs are great because they're extremely inexpensive and you don't have the same management fees that mutual funds do. The only downside of this approach is that you do not get that tax benefit that I mentioned earlier if you would have invested directly. So with that, folks, that's all for today. I hope you found this information as enlightening as I did. Remember, knowledge is power and staying informed is the key to thriving in today's markets and making money. Don't forget to hit that subscribe button, ring that bell below for notifications, and leave your comments below. I'd love to hear your thoughts and where you are finding opportunities. And don't forget, check out my cash flow wealth building system at go.johnmacgregor.net. Again, go.johnmacgregor.net. It is a game changer. Thanks for tuning in. We'll see you next time on Full Disclosure. Take care. Happy investing and aloha. Bye bye.